So a lot of people have been asking me that, Shashank, what is going on with the defense space? Do we buy? Do we sell? Is it overvalued? Is it undervalued? Can't understand what's going on. Is it a hype? What is absolutely going on in this entire market? And that is what we're going to look at in today's video, because a lot of these defense companies have done a very steep rally. And I know a lot of you guys are getting this FOMO that, I want to invest in this. Can it do well? Can it not do well? But I think it's high time that we all take a step back and look at the bigger picture, bigger vision before we start investing in anything. So today, let's understand and do a quick top-down approach where we look at the sector very quickly first. What is the future of this sector? Then we will look at 4 or 5 different companies and then shortlist what are some interesting companies, what are not overvalued, what are decently valued, what are undervalued, and what are the different purposes they solve. So this is something that we need to look at right now and understand more deeply. First thing what we're going to do to get deeper understanding is to look at this report that has come out by KPMG just now, which is called Atmanirbhar, Agrani and Atulya Bharat 2047. This has come out in this month itself, in the month of May. Very, very, very interesting report. And this basically talks about what is the plan for India going forward. And you can see here, there is a very clear vision that has been given in this plan. What is the vision? The first thing it says that in the short term, from 2025 to 2031, India needs to achieve maximum self-reliance, because when we just had this Indo-Pak war, we realized a lot of things where we were good at and some places where we were bad at. So now for the next 6 to 7 years, we are going to ramp up our defense budget and we are going to spend a lot on making ourselves Atmanirbhar. That is number one. Now, Indo-Pak war, even though it was so bad, from a very weird standpoint, it became also beneficial for India, because a lot of people across the world saw India's BrahMos missile in action and also saw how we defended the country really well and how things were good. Because of that, a lot of people have asked us to export our products to different smaller countries as well. These missiles have to be exported. So now India can now also look at, in the medium term, becoming an exporter of defense, when earlier we were only importing defense from either Russia, France or US, right? And long term, I think now we have really realized that we cannot depend on other people for these aircrafts. We need, and missiles, we need to do it in house. And we have the talent. Our Indians are very smart. We have the talent, we just lack the R&D, we lack the infrastructure. And that is something that also this report basically talks about, where we need to invest in fundamental and applied R&D. We have to procure the talent, we need to build a proper infrastructure, and only then we can grow well. So this is a very nice report for anyone who wants to read, because this talks about everything. But again, I will share this in the description for all of you who want to read it. We will understand a little bit more about what happens in the future, right? There was a recent report, again, a very recent report come out by Antique Stockbroking on 12th May about the Indian defense sector. And this report basically talks about the shipyards, the listed defense shipping companies, right? Now, why they are saying that this is an opportunity. And by the way, please understand, this is a research report that I'm evaluating. I'm nowhere linked to this research report. So just to learn, we are doing this, okay? Now, look at what it's saying here. Listed defense shipyards order book mostly will go up 3 times in 2 years. Order book will go up 3 times in 2 years. And the main companies that are here are Mazgaon Dock, Cochin Shipyards, and GRSC. And if you look at the stock price of these companies, very clearly, you will see from a 1 year, 3 year standpoint, you will see GRSC is now become like HAL. It is actually flying up and it is going up really well. So something is going on in this space, and even in the defense space, which is non-aircraft, non-missiles, mostly in your marine, they are also doing really well. Also, guys, please, a big shout out to Grow, because as you see, they have supported this channel very well, so that we can now focus more on creating valuable and good knowledgeable insight, which we can start giving out to our audience as well. So I again want to thank Grow for putting us into the Grow network and actually supporting this channel very well. If you want to know more and understand more about finances, you can definitely go check out Grow with the link in the description. Coming back, so if you look at this sector, what has actually happened and why is the defense order book going up so much, and you will see it here. This is the order pipeline. Look at this very, very, very closely. This is the order pipeline of the entire industry. And you can see that now the commercial bid is opened, awaiting contract price. This is for 6 numbers of Project P751, which is conventional submarines with air independent propulsion. We have P19, which is next generation stealth guided missile destroyer. Next generation corvettes, again, bids to be opened. Frigates, Kalvari class attack submarine, indigenous aircraft carrier, 2 more aircraft carriers, 1 more aircraft carrier is going to come. Project 76, fast interceptor craft. So many things are coming up in this is, by the way, just the shipping department, right? This is not your air and missiles, this is just the submarines and the marine department. And you can see here that the order book for the next 3 years is going to do really, really well. And if you look at the projection that Antique is doing, it says that as of FY25, the combined order book of Mazgaon, GRSE, and Cochin is somewhere around 1,000 here, 1,000 INR billion. So it's obviously much more. But if you look at it for the next 3 years, we are expecting it to go 3x more, which is going to be a huge boost in the entire space, right? And it depends on who gets the order. And usually it works in this way where Mazgaon gets most of the orders, and then GRSE and Cochin get a little bit of the orders as well. But because there are only three players, usually this trickles down into all three of them. It usually doesn't go to everybody, it usually goes down to all three of them, right? So that is what people are looking at as to where is the opportunity that is coming out for the next big game. And another thing that I wanted to show you guys over here is that we are now entering a phase of shipbuilding. We were never focused on shipbuilding. Our country was never focused on it. China definitely, Korea was there, Japan was there, Europe was there, and we are also surrounded by sea, right? We should have also focused a lot on this, but we did not. And now we are going to start entering the growth phase. China obviously has a massive shipbuilding capacity, so now we are also now going into the same phase where the government is keen to build India as a shipbuilding hub, which was still now not a point. Now, shipbuilding, there are 2, 3 different types of revenues that come in. One is building it and one is maintaining it. So maintenance also comes into like a recurring business that comes in. If you look at the margin profile of these companies, the gross margins of CSL, which is Cochin Shipyard, is quite high. GRSE is at 30 and MDL is at 39. Right? If you look at the EBITDA margins, again CSL and MDL are doing really well at 22 and 23. PAT margins are also good. GRSE is not operating at very good rate. But if you look at Mazgaon, they are operating at a very high capital employed ratio of 50%. So it all depends on how fast I can take the order book, how fast I can deliver it, and how fast I can book the revenue into my entire thing, right? Now, coming to the companies, let's look at some other interesting companies as well, and let's look at a little bit of technical analysis. Now, GRSE, if you look at it from a fundamental standpoint, if I come down here and look at it from a fundamental standpoint, as you see, all defense companies today are definitely slightly overvalued. If you look at GRSE, they are sitting at a 65 PE. But as we saw, the return ratios were not very crazy when it comes to GRSE, right? If you look at the ROC, it was not that good compared to, let's say, a Mazgaon or whatever. And even from a order book standpoint, usually those Mazgaon usually will do really well. If you look at from a revenue, profit, all of this looks good, but this has a P issue slightly higher. Now, if I do the same thing and I look at Mazgaon, again from a chart pattern similar, and we will do quick technical analysis as well. If we go here, you will see you're getting the leader at 58p, obviously, compared to someone slightly lower at 65. This is coming at 58. So just from and with better ROE and ROC ratios, right? So this again looks very interesting for me, and this is something that will get the most amount of orders, and the most amount of growth usually happens with this, again provided they do a good job. Because I've seen that this with HAL also the same problem is happening, where the companies are not doing a great job, right? They're delaying on all of this, delaying on the delivery, which is actually creating a big issue going forward. Another very interesting company is BDL, Bharat Dynamics. Superb it is doing in this space. Only problem, as you see, all charts are very similar. But the biggest problem I have with BDL is the P ratio. It is supremely overvalued. But very, very, very interesting company for the next 3 to 5 years. If this cools down, it becomes a good pick. But right now, it is, I would say, supremely overvalued, and I would be very scared to invest as of today in this company. But this is something that works very well with airborne products and defense equipment. So this is something that is in that zone of being a very big player going forward, right? Apart from this, BEL is also doing is also helping the defense space a lot, but it won't go up so much. It has gone up definitely. As you see, all charts are very similar. This is slightly a large cap company with also a 52p ratio. But also please understand, government companies having 50p ratios are overvalued. So please don't let anyone fool you and say 50p is low. It is not. It is overvalued. But here you can see that BHEL is at least a consistent compounder, as it has been growing yearly consistently. The profit has been growing consistently. Net worth has been growing consistently. So at least you know that dangerous kuch milega nahi, right? It is something that is a traditional peaceful grower, and in the last 4 5 years it has been growing. Look at this, it has been a grower. So now I'm showing you all options because I want you to be very aware of your risk reward ratio, right? Now if I look at GRSE, Mazgaon, Cochin, Let's look at Cochin once, because Cochin had good return ratios as well, right? Let's look at Cochin 1 year, 3 year. Looks little scary, right? Let's go down. Cochin is sitting at 61. So see, GRSE, Cochin, and Musgao. Musgao sits at a slightly lower P ratio compared to all of the other companies with better ratios, better ROEs, better profit margins. So if I had to take it only from a pure risk reward standpoint, when the industry leader is sitting at an undervalued position and is also going to gain the most amount of market share, then why should I think too much about the other players, right? So BEL also looks very interesting from a long-term standpoint. These are not short-term companies. Please understand this. These are very long-term players. Coming to BHEL, okay, this I remember also was helping really, but I would not say it helps too much into defense, even though there is some space coming into this, but I would not go too deep into this. Another company that is coming out really well is Data Pattern. I don't know if you guys have heard about this company, but this again, obviously these are smaller companies, so the risk reward ratio is completely off, right? But this is something that a lot of people have been talking about, because yes, P ratio is high, return ratios are okay, but if you look at the revenue growth and the profit growth, looks very interesting, right? Look at this. I'll go yearly and you will see the yearly trend coming up over here, right? Looks very interesting, because if you see, the revenue has grown systematically over time, right, with good margins. Net profit has also grown very systematically. It's gone from 20 crores to 181 crores in a span of just 4 years. The operating profit margins also are looking beautiful. In fact, it's gone from 30% margin to 51% margin. The net profit has gone from 13 to 34%. This looks like a underdog playing in the space. And if I go back to this company, look at this. Where is this? It's a 15,000 crore mid to small cap company. 15,000 crore mid to small cap. What does it do? Let's look at it more detail. It is an India-based vertically integrated defense and aerospace electronic solutions provider catering to developed defense product industry, right? So they have code boards, ATE and test systems, microwave products, electronic warfare. So this is again very important, and this is also doing well systematically over time, right? So this is something that again looks very interesting, but obviously we need to go deeper into it. If you look at the cash flows, they're also doing well on cash flows. If you look at their balance sheet, what is their debt to equity ratio is also completely fine. It's absolutely debt free. So this again, please keep it on your radar. Again, this is not a buy or sell recommendation, so please don't get overexcited and go buy. Please understand, all these companies are sitting at a very peaked out valuation zone right now. They are not sitting at an undervalued zone right now. So I think I've shown you couple of very good companies, and please understand, this is not a theme for 1 month, 3 month, 6 month, 9 month. This is a 3 years to 7 year time frame. So whenever you invest in any company right now, do not look at it from a very small standpoint. Look at it from a bigger scope, bigger horizon, because now we're going to play a longer game. It is not a short term game anymore. So start focusing on the bigger picture and think, if the defense budget starts going up really well, where can I end up? If the defense budget start doing well, where can we go up? How much can it grow? And there is also a projection that the defense budget can go up quite drastically. In fact, that KPMG report that I wanted to show you, look at this. This has a very clear indication of where the defense budget is going to go. In 2024, the defense budget is 6.8 lakh crores, but in 2047, it can go up to almost 5x to 31 crores, 31 lakh crores. If you look at the defense export, which is the, I would say, the most important right now, the key underlying growth trigger is going to be defense export, because we were never an exporter, and this is sitting at 30,000 crores today, planned to go up almost 9x by 2047 in 20 years, which is, if the industry itself is going to grow at such a rapid pace, then just imagine what will happen to the stocks that will also grow. But again, please understand, this is all subject to the government. If the government changes, all the orders will get blocked. We might go back into importing from other countries and all of that. So that is a key risk, which is the regulatory risk. The another key risk again with regulator risk is that they might cancel the orders, they might delay procurement, they might stop procurement. So all of those delays are also there. So don't get, as I said, don't get overexcited and say we have to buy right now. Please keep a track of what the government of India is also doing on all of these fronts. Okay. Awesome. I hope this helped. I hope you guys enjoyed this. I'll share the report in the description, and I will share the report in the comment section as well. And again, a big thank you to Grow for being a part of the Grow network and supporting this channel as well. Right. Again, this is me, Shashank Godappa, signing off. Take care. See you guys. Bye bye.